today, as I mentioned, we're going to talk about wealth accumulation. Now, a lot of people traders know me more as I know me more, I'd say, as a short-term oriented trader. I have built up an international reputation for being one of the pioneering day traders. I started my trading career in December 6th of 1986 on Wall Street. And I had a very illustrious 8-year career, which led me to leave Wall Street to form my own off Wall Street firm. That firm attracted other Wall Street firms as my clients. So my first clients were other Wall Street firms who would send me their traders to be trained in my particular style of trading. I also provided research to virtually all the firms on Wall Street over a 12-year period. And because of that start on Wall Street as a short-term oriented trader, my international reputation grew more as a short-term oriented trader. But what a lot of people don't understand is that I have over 98% of my wealth in wealth generating plays, and about 2, sometimes as much as 5, depending upon where we are in the market, anywhere from 2 to 5% of my capital is deployed in short-term oriented trading. And I believe that both are necessary. There are times in the market where being short-term oriented is actually preferable to being a long-term holder. But over time, there's a difference. I want people to understand that there's a huge difference between income generation and wealth accumulation. Your income generating activity should be designed to give you the ability to begin socking away for wealth accumulation. Okay? And so the goal of every short-term oriented market player is to be able to generate more income than you need to live a very, very good life. And the excess that you don't need to live that wonderful life should be put into wealth generating plays. And so that's what I teach my traders to do, to bridge these two styles of market play together, that you don't choose whether or not you want to be a short-term oriented trader or a long-term investor for wealth accumulation. No, you need them both. Okay? So income generating is very, very good. All right? We need to have that high productive income generating trading that goes on, but we need to move that trading to a level that is generating more than we need to live a wonderful life. Never, never, in my opinion, I tell my traders at least that you should never be looking to not live a wonderful life, a comfortable life. Okay? Once you are generating enough income to live a comfortable life, then you must work on accelerating that income production to go beyond what you need. And the amount that is beyond what you need is what should be deployed in your wealth building or wealth building activities. And that's what we're going to talk about today. All right. Okay. So let's get started here, guys. Let's get started. Now, what do we need? What we need to know. I've got to lay some groundwork here before we get into the strategies. And this groundwork is very important. It's going to serve as the foundation upon which you're going to understand why you're going to take certain actions. There are 3 types of markets that need to be understood. And I'd like for you all to maybe take some notes. Don't take them too copiously so that you miss what I'm saying because you're writing. But I do strongly encourage that you take some notes here. Okay? So there are 3 types of markets, and you need to understand all 3 types of markets. Okay? There is this boom bust. There's a boom market, there's a bust market, and there's a flat market. Okay? And we all know this. Some people call the boom part of a market cycle the bull part of part of the market cycle. The bust they call the bear, and we have flat markets. And what a lot of people fail to realize is that the market predominantly vacillates between these three states. The market can only do three general things: go up, go down, go sideways. And if you know how to handle, you have specific tools and tactics that are specifically designed for the up part of the cycle. All you have to do is identify when a market is in its boom cycle and pull out the tools that are up tools. And when you identify that a market is in the bust part of the cycle, you need a tool bag that, I'll put this here. I know my writing is a little terrible here. You need to pull out your down tools, your down market tools. And when the market is sort of going flat here, you need a tool bag called flat tools. Okay. And so once you have tools that match each part of a market cycle, all you're responsible for doing is identifying which part of the market you're in, which part of the cycle you're in, and then to pull out the proper tool bag. All right. So up tools go with the boom cycle, down tools go with the bear cycle, and flats can go with the flat market environments that typically appear at the tops and bottoms. All right. We're going to talk a little bit more about all of this in detail. Now, which markets? There are, from a macro perspective, there are markets that perpetually, not cyclically, there are markets that perpetually are boom markets, which means that long term, they are almost forever boom, which means that they never go bust. They never go flat in a way. They are perpetually boom markets. This is important to understand. Which markets never go down over time? Yes, there are markets that never go down over time, traders. That over time, they go down temporarily, but over time, even those down movements generally produce an upward trend forever. Yes, there are markets that do go up forever. That's right. Then there are markets from a macro perspective that go down forever all the way until they disappear. Now, this is important to understand, traders. This is very important to understand here. There are certain markets that exist that are designed to, over time, vacillate up and down, but the general trend is to go all the way to zero. They're specifically designed to do that, to go to zero. Which markets are they? And if you don't know which markets are designed to go to zero, you'll never really be good at generating wealth, because the idea is to transfer what you have in the markets that are designed to go to zero and move it to markets that are designed to never not go down. There are markets that are designed to go up perpetually forever. And there are markets that are specifically designed to go to zero. And repeat, another market comes into existence, it's designed to go to zero. And repeat. Now, here's the interesting thing. Now, this is an image of what I call a boom bust up market. So what do I mean by a boom bust up market? What I mean is that this market has boom periods and it has bust periods. See the bust periods? Bust. It has boom periods, boom, and it has bust periods, boom. But even though it has these medium term cycles up and down, its general trend over time is up forever. That's right, forever. Okay? That's very important to understand. This is the boom bust. You always are going to have booms and busts in the medium term, but long term in this market, it's going to go up forever. Now we'll get into these things a little more involved in just a moment. Which markets are boom? So which markets are these? Which are the markets that go up sometimes and down sometimes, but over time they go up forever? Let's look at those. All right. Now I want you to take a look at this. Take a look at it very carefully, traders. Take a look at it very carefully. Let's look at the items. Let's look at the specific markets that go up forever. Gold. Gold is an asset class that has been going up for over 5,000 years. Now, in the beginning of those years, it went up a lot more dramatically than it goes up today. Today, gold rises on average about 1.9% a year. But it's freaking 5,000 plus years old. All right? Think of a young 24-year-old, and then think of a 94-year-old. Okay? So when gold was a young 24-year-old, it was going up a lot more dramatically. Today, it's a 94-year-old, right? And it can inch forward, but it still continues to inch forward. 5,000 plus years. Look at silver. A lot of people don't understand that silver is actually older than gold. There was a time where silver and gold were on equal par in terms of their value. Now there's a dramatic difference between the price of silver and the price of gold. Gold overtook silver, but silver's been in existence for 1,000 years more or less than gold. And it has been going up for 6,000 plus years without fail. Oh yes, during those 6,000 years, boom periods, bust periods, but over the long term, it has never stopped going up, ever, never, never. There's art. Guys, you realize that art has a 90,000 plus year history, and that art has never stopped rising in value, ever, in 90 plus years. Collectibles are amongst the oldest. Art's the oldest, but then people begin to make art to wear, to hold, to carry. Not just the art on the wall of a cave, but they begin to make art to carry, to hodl, to hold. Collectibles have been going up over time for 23,000 years. Today, that would be coins or watches and things of that nature. Baseball cards, sports cards. Then there's farmland. Now, we're not specifically talking about real estate in general. We're talking about farmland, the land that actually is used to produce food. Farmland's been going up for 32,000 years. Then there's rare real estate. Rare real estate's been going up without fail for 50,000 years. And then we come to the final, Bitcoin. The baby. Bitcoin's the baby of the bunch. It's the new kid on the block. It's only 12 years old. And yes, it fits in this market category that will forever go up forever. And when people say, well, Oliver, how can you say that Bitcoin is going to go up forever. And I always say, well, look, gold's been going up for 5,000 years, silver for 6,000, art for 90. How long has the stock market been going up? How many decades? How long has Amazon been going up? How long has Apple been going up? Traders, listen to me carefully. Very important. Listen to me carefully. When I speak, right, I speak to people who aren't familiar with financial markets all the time. And it's sad in a way that certain basic financial facts are just void in the general public. Most sound markets go up for many, many decades. Sound markets go up for many decades. Sound assets go up for thousands of years. But if we take, for instance, just the stock market, the stock market has been, let's take it from 1933. If we were to look at the stock market from 1933, all right, you have a multi-decade run right up until today. So how many decades is that? How many decades has that market been going up over time? And let's go inside of that market. I placed my first wealth buy in Apple at a split adjusted price of 60 cents. Apple has been going up for 42 years. 42 years. Microsoft's been going up for 44 years. Amazon's been going up for 24 years. 24 years. These are the baby ones, right? This is getting more baby. Google's been going up for 22 years. Bitcoin's been going up for 12 years. So why can't the baby Bitcoin go up for 40 years, 100 years, 1,000 years? If gold's been going up for 5,000, silver's been going up for 6,000, real estate's been going up for 50,000, art's been going up for 90,000. All right, the stock market's been going up for many, many decades. Why can't Bitcoin go up for many, many decades? And it's one of the soundest markets, the newest, the more improved market. And we'll talk a little bit more about that. It's important to understand which markets are designed to never go down. Now, notice, guys, on this list is not the stock market. Check this out. Remember? Don't get it twisted. On this list, you don't have the stock market here. The stock market is not one of those markets that goes up forever. Gold is, silver, art, collectibles, farmland, real estate. Bitcoin falls into the category of a market that is designed to go up forever because of its scarcity. That is what is the common theme of all markets that never go down over time. They go up over time. They have their bust periods, but over time, they will forever go up because of scarcity. Gold is not something that grows on trees. Gold is not something that you can mine very easily. You produce gold with tremendous effort, years of planning, research, scientists, machinery, manpower. It's not easy making it a relatively scarce item. Silver is mined a lot more easily. Therefore, its price in relationship to gold is far less. It's still relatively scarce. It's not like, I don't know, it's not like grass, but the difference in price is related to the scarcity element. Silver is far more readily accessible, therefore its price is way less than gold. All right? Art. There's only one Mona Lisa. Art is typically scarce. When art becomes valuable, it's valuable because there's only one, or at least a limited edition of the art. So all markets that are built on scarcity will go up forever as long as there's demand. There will be demand for gold. There will be demand for silver. There will be demand for art because it's been going up for 90,000 years. There will be demand for collectibles. They've been going up for 23,000 years. There will be demand for farmland. There will always be demand for real estate. And because Bitcoin is capped at 21 million Bitcoin forever, because 6 million of those 21 million Bitcoin have already been lost, because 86% of the 21 million Bitcoin that can ever be produced has already been produced. 86% has already been mined. And 6 million of the 21 million Bitcoin have been lost, making this the scarcest asset in the world's history, which I'm hoping to convince you will go up more than every single one of its brothers on this list. Why? Because if scarcity is the reason that markets go up forever, then the most scarce asset of all time must go up bigger than all the other assets forever. Scarcity plus demand is the key. Scarcity plus demand is the key to wealth.